they've given each other 90 days, and we should use that time. Very often these agreements are never done early on. They're always done in the last leg of those negotiations, and it's a very positive signal that this week at some level of government, at a lower level of government, there are ongoing negotiations.
I think you would quite like to deliver a win, and it's probably possible for the Chinese negotiators to offer enough for him to declare a win. But we'll probably see some ups and downs between now and the end of the 90 days.
This is a very short deadline, so we can't be too optimistic about a whole lot, but it would be nice to see some progress. It's a lot about egos, but ultimately there's a lot on the table, and that is pushing the two leaders and their teams, I think, to find a way forward.
We're not seeing a collapse in global trade, but what we are seeing is companies struggling to find ways around these trade taxes. We're seeing less efficient production, and of course that less efficient, that less competitiveness is primarily falling on American companies because they're the ones that have to pay the trade taxes.
It will probably take a little bit time until the fiscal and monetary policies really trickle through into the economy. However, we do believe overall the investor sentiment is really what needs to be lifted, and clear messaging, I would argue, around the trade dispute and in particular also the policy measures is necessary to lift that investment sentiment back up.
That was a selection of market voices responding to US-China trade talks, which kick off again today in Beijing. Both sides are aiming to reach a deal before their 90-day truce ends in March. And as US-China talks get underway then, we thought it's worth looking at some of the key issues at stake. The US has accused China of forcing American companies to share sensitive technology and stealing intellectual property. Another concern is Huawei. The company has long denied claims by the US and its allies of facilitating state-sponsored espionage. Rounding out the trio of tech issues is Beijing's Made in China 2025 plan, which the US argues is violating WTO rules.
Trade tensions have also disrupted what should be a sweet deal for the two countries in terms of energy. The U.S. is becoming a major oil and natural gas exporter, while China has emerged as the world's biggest buyer of both. Another commodities issue is China's retaliatory tariffs on U.S. farm products, plus auto tariffs remain an ongoing concern, despite China temporarily scrapping its 25% increased tariff on U.S. imports at the start of the year. Joining us now with the latest is Bloomberg's chief Asia economics correspondent, Enda Curran. Enda, what are we expecting from this initial round of negotiations here?
I guess we're looking for any kind of positive signals or signs that the mood music is pretty good and that these talks will lay the foundation for more detailed and serious negotiations with the next level of officials in Washington, D.C. perhaps. So a lot of economists and market analysts that I spoke to this morning were making the point that the very fact that these talks are even happening in the first place is a positive. It's a positive for sentiment, and it indicates both sides are willing to come to the table. But if these talks don't progress anywhere and don't lead to any further rounds of negotiations, well, then we are back to square one. Sentiment will remain somewhat sour, and the threat of new and extra tariffs will re-emerge. And that's why it's critical to see whether or not these particular talks in Beijing, while they're not expected to agree any kind of final outcome, at the very least, let's see if they do green light the next stage of talks.
Yes, and good morning to you, Enda. So we've listed some of the hurdles that exist, and it's clear it's not just about cutting tariffs, is it? This is a much broader conversation.
No, you're absolutely right, Anna. I mean, there is a view that on the goods deficit side of things, there's a deal to be done, and a deal that could be done quite easily, actually, because China is more than willing to buy more of the U.S. goods that it needs for its economy. There's also a view that China can probably make some offers in terms of more market access and promises around IP and the like. I think the two thorny areas really come down to, first and foremost, China's economic and industrial strategy, its ambitions to create this world-leading technology-driven economy with, of course, a little bit of help from the state. The US has several concerns around that strategy. And then, of course, the other issue is promise fatigue. China has in the past made several promises around opening up its markets and IP protection and so on, only for them to either not deliver or renege on those promises. And I think there is a view this time around that whatever agreement is reached, if there is one, there will have to be tangible ways of measuring just how China is executing and delivering on those promises. Otherwise, I think there will be a sense that these trade talks or this trade truce may not last that long.
All right, that was Bloomberg's chief Asia economics correspondent, Enda Curran there with the latest on what's going on in China. Let's get now the Bloomberg Business Flash. For that, we go to Desley Humphrey. Des?
Thanks, Matt. The flagship hedge fund run by Ray Dalio's Bridgewater Associates rose 14.6% last year as stocks fell broadly. The Pure Alpha Strategy Fund is the world's biggest, with about $160 billion in assets. A document seen by Bloomberg also shows it's made an average annualized 12% net returns since its inception in 1991. Hedge funds on average lost 6.7% in 2018. Tesla is finally breaking ground on its $5 billion factory in the world's biggest car market. After 4 years of planning, CEO Elon Musk is in Shanghai today to lay the foundation for the electric car maker's first car manufacturing plant outside the US. The ceremony comes at a point where car sales and China's economy are both slowing amid trade wars with the US. Apple and Samsung have announced a new partnership which until recently would have seemed unthinkable. The iPhone maker is bringing iTunes movies and TV shows to its arch rivals' television sets. Analysts say the move is further evidence Apple is moving away from its hardware-first approach and is willing to work with third parties to boost service revenues. Goldman Sachs has cut its oil price forecast for 2019. It now sees Brent averaging $62.50 a barrel, down from its previous forecast of $70. And it's cut WTI from $64.50 to $55.50 a barrel. The bank expects the market to now balance at a lower marginal cost due to elevated inventories, shale production growth, and weaker demand expectations. And that's your Bloomberg Business Flash. Matt and Anna.
Desi, thank you. Desi Humphrey for us in Dubai. We're minutes away from the start of the equity trading day this Monday, 7:50 here in London. We'll take a look at your stocks to watch at the open. We'll go around Europe, of course, including Siemens, after a report that its planned merger of its train business with Alstom won't get EU approval. This is Bloomberg. morning, everybody. This is Bloomberg Markets, the European Open. 6.5 minutes to go until the start of your equity trading day. I'm pleased to say from our equities team, we're joined by Joe Easton to run us through some of the things we need to be watching out for. Joe, good morning. There is some news flow around some corporates, but there's quite a lot of upgrades and downgrades for the new year to get our head around. Cineworld, very bullish call on this sort of mid-sized stock from RBC.
Yeah, so that's an interesting one. They had this big merger with Regal in the US last year, but the actual most exciting part is what they're saying is there's a lot of good films coming out this year. So sequels to Toy Story, Star Wars, movies like that. So there's a good slate for the company this year. So that could well boost the earnings this year. So it's an interesting note
Matt?
from RBC.
Yeah, we're also getting different calls on banks. On Morgan Stanley, for example, from SKF. We're getting calls on UBS. What are you hearing about the financials?
Yeah, there's been a few from financials. I think most of the notes I've seen this morning have been more on the industrial side. So we had SKF, which was it's a maker of ball bearings and seals and stuff like that for machinery. They've actually had a upgrade at Morgan Stanley there. That's just come in. And also we're looking at Centrica, British gas owner. They've been downgraded. So there's some concern over high gas prices in the UK. And then there's obviously the concerns around the political direction, so it's probably not a good thing for the utilities there. So there's a few good broker moves coming in this morning.
Okay, we'll keep an eye on roller bearings. Siemens Alstom then, what about the fate of their train merger?
Yeah, so Siemens, obviously they wanted to merge this rail unit with Alstom last year, but we actually had a warning from the EU Commission in December saying that they weren't happy with the conditions of the merger. So it's not a huge surprise that now they've come out and said this today. And actually, if you look at the size of the sales, the new company was expected to have sales around $15 billion a year. So you can see why there's competition concerns there. But obviously, that will probably weigh on the stocks this morning.
All right, Joe, thanks very much. Joe Easton from our equities team, catching you up on some of the upgrades and downgrades out there. You can get all the latest stock stories by typing First Go on your Bloomberg, and you can get that, of course, via the mobile app as well. Coming up, the market's likely to open up as futures point higher. This is Bloomberg.
than a minute to go until the start of cash equity trading this Monday morning. Good morning, everybody. Let's have a look at these four markets and what they tell us about where we're heading here. This is strength in the euro, but is it actually weakness in the dollar? We've got the euro and the pound both a little stronger against the greenback, but generally speaking, it's risk on across these markets over in the Asian session, and that means selling of the dollar, the greenback down around 0.3% right now. Up 1.7% with that risk on mood on the oil price. Goldman Sachs has brought down its estimates for where oil prices go in 2019, but that's still a little bit higher than where we are at the moment, so we need to rally apparently. The CSI 300 up by 0.6% in session. That did not get the best of the gains over in the Asian session. Elsewhere, we saw better gains. Japan in particular, we saw better gains, but generally the spirit in Asia was positive, and we are expecting that to come through into European equity markets. So the futures point higher for European equity markets. Not as much as we saw in Asia, but certainly we are expecting to go higher because of what we heard from Jay Powell and what we saw from the PBOC. Let's have a look at how these markets open on then. This Monday morning, it's not the first trading day of the year. Feels like a lot has happened already, but certainly it's a fairly significant one. Maybe we'll see higher volumes today, given we've come off a number of market closures over the last couple of weeks or so. Trade very much at the heart of things as well as we go into 2019. The next 90 days setting us up for talks between China and the US on the trade front. But what kind of expectations do we have about that? We talked about that in the last hour with Ender Curran. We'll talk to our guest, Koku Agbublower, about that subject shortly. Brexit back with a vengeance as well on the news radar. So we are going to see more talk about that. The FTSE 100 up by 0.5%. The CAC and the IBEX both up by 0.4%. So we make gains here across these European equity markets, Matt, this morning.
Yeah, absolutely. I just want to bring you up to date on some headlines we're getting from China as well. Already the Forex reserves, they've come in basically in line with the estimate, $3.0727 trillion worth of Forex reserves. We were looking for $3.0717 trillion worth of Forex reserves. So some China news coming across. China, obviously a huge part of these markets. Take a look at what we've got as far as the breakdown of Stocks 600 in the Stock 600 index in terms of industry groups. Basic resources are the biggest gainers here. So oil and mining stocks are up. You see oil and gas is the sixth biggest group, but basic resources is the top. Tech stocks are up as well. Not such a huge slice of the Stock 600, but they're gaining today, as well as industrial goods and services, construction, and materials. Taking a look at the losers, Anna, the only ones we see are really some defensive groups. Food and beverage stocks are down, healthcare stocks are down, and utilities are just sort of treading water here. So the more defensive sectors are off this morning. Anna, what do you see on the MOV as far as the individual stocks?
Yeah, let's have a look there. We've got TGS moving as the biggest gainer. Adyen in the payment space is also higher. That was one of the much talked about stocks of 2018, of course. We see Tullow Oil moving higher. We saw one of the brokers changing. It was RBC rejigging its thoughts on Tullow, and it upgraded Tullow, and London downgraded Enquest. So some of these upgrades and downgrades we talked about earlier having a bit of an impact on the markets. Lagardère is also one of those that's moving on a downgrade. That's down by 3.5% if we switch to the other side of the MOV screen. Lagardère, the price target cut to €30 versus something only a fraction higher than that by HSBC. In fact, HSBC names Lagardère among its France small and mid-cap first half picks, but that is not helping the stock this morning. That's a quick look at where we are on the stock specifics then, Matt.
All right, so European markets are opening up across the board. Not the size moves that we saw in Asia. Japanese stocks were up more than 2%, or not nearly the monster rally that we saw in the U.S. on Friday with the S&P and the Dow up 3.5%. But it all comes after the Fed kind of changes its stance, saying it's not on autopilot. It's going to be listening to markets, and it's ready to take a pause in its interest rate increases as it becomes more data dependent. Joining us to talk more about this is Koku Agbublower, Global Head of Flow Strategy and Solutions at SocGen. Koku, I'll kick it off with the MLive question of the day. How far do you think risk assets can rally on a more dovish Jerome Powell?
Well, I mean, I think this is clearly a question about how big the correction has been. So typically, sort of rebound can be between 15 to 25% of the drop they've suffered. But I think the more important point will be going forward is whether we are likely to see outflows given the poor performance of a lot of asset management and hedge fund in 2018. And that will be the key factor to monitor in terms of flow going forward.
So that's the good morning to you, Koku. Happy New Year. I've got a chart here that talks about S&P 10-day realised volatility. It's the highest in 3 years. Is this a feature of, and you reference this in your notes, you talk about the 5 stages of grief, and apparently the markets are going through these 5 stages of grief. Is higher volatility a feature of the acceptance phase, which is where you say we are right now?
Well, this is an interesting point. So our view is just simply take the analogy of the 5 stages of grief. So you typically have sort of anger, denial, depression, and then acceptance after going through bargaining as well. So I think realized volatility is part of late cycle market behavior. So is where the market is a bit confused as to where the path of earnings growth is going and where the macro data is going. And this is pretty much what we saw in December, where the market was pricing to collapse pretty much. And this is something you saw with tech stocks collapsing, with the bond yield flattening. And now we're starting to see a sort of debate as to whether the strength of the non-farm payroll data is essentially pointing to a longer cycle. So I think this sort of confusion phase is part of the acceptance phase, and we are likely to still have a recession in 2020.
You think we're going to have a recession in 2020, even as we get numbers like 312,000 new jobs, 3.2% wage inflation? I mean, the U.S. economy seems to be purring along, with the exception, of course, of the 46% of companies that have cut their fourth quarter earnings outlooks.
Well, I mean, this is where it's quite interesting. So you see Apple clearly cutting their guidance when it comes to their exports to China. But I think it's also important to realize that we've been through one of the longest business cycles in history, and that monetary policy typically takes a couple of quarters to have its impact on the real economy. So if you look at the tightening that we've had so far, you look at the high yield situation in the U.S., the slowing momentum when it comes to earnings growth, there's a lot of evidence pointing to a slowdown. And last but not least, you have to realize that the two drivers of growth have been Trump on the first side of things when it comes to its fiscal stimulus in the first 2 years of his administration, and then China as a sort of driver of growth. And these two factors are slowing down and are unlikely to be as aggressive in the next 2 years.
You listed there, Koku, some of the negatives around the growth story in the US, and I was looking at the 5 Fed indexes from the regional Feds, manufacturing indexes. They all dropped in December. Of course, we had that ISM was much talked about last week, dropped the most since 2008, even if still expanding. So there's this gloom, as you point out, a sign that we are near the end of the cycle. Is that consistent with strong jobs growth? Is it just that the job story is lagging, which is something you talk about sort of economics 101, that the job story can lag other indicators?
Absolutely. I think this is important to differentiate between sort of backward-looking indicators and trailing indicators and forward-looking indicators. And the forward-looking indicators have clearly been pointing to a slowdown in growth. But I mean, I think the point here is obviously that there's this, I mean, forecasting is not an exact science, but I think it's a question of probability and the odds for things to slow down going forward, because the drivers of the growth in the first place are unlikely to be as aggressive in the next couple of years. I think it's something to realize. And last but not least, as you mentioned in your previous, one of your previous commentator, the fact that you have strong growth also sort of solidify the argument about wage inflation eating into corporate profit margin, which in turn will have an impact on their ability to hire going forward.
I'm just looking at, Koku, this chart that I put together with the help of Gina Martin-Adams from Bloomberg Intelligence, taking a look at the biggest bull runs in history. I mean, you can really make an argument that the Reagan bull market went almost 2 decades from, 1980, 182 until the end of the millennium. Can't this market continue to do that, especially if we get things like a trade deal, maybe if we get some more infrastructure spending in the U.S. or another tax bill, which has been talked about?
Well, I mean, clearly, history repeats itself. Doesn't repeat itself; it rhymes, as one used to, people used to say. But I think what's important is to look at how different the sort of past few years have been. You had monetary policy that essentially expanded central bank balance sheet to unprecedented level. You're starting to see empirical evidence of corporate balance sheet in the U.S., particularly in the high yield sector, being overstretched, and there are effectively signs where wage inflation is clearly picking up. So it's part of the laws of economics to see a slowdown as part of after a very strong sort of few years of expansion. And clearly things can expand, but I think in terms of probability and odds, it is more safe to argue that a slowdown is likely to occur in the next 2 years.
Okay, we'll get some details from you then as to where we hide from that slowdown or make the most of it. Koku Agbabloa stays with us from Societe Generale here on set in London. Up next, we'll bring you the stocks on the move so far this morning, including ArcelorMittal. Further news flow on that stock. We'll get you details shortly. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are looking at stock indexes that are up across the board. Let's get now to the individual stock stories. For that, we go to Anne-Marie Horton. Anne-Marie?
Thanks, Matt. Well, Siemens, relatively flat this morning. The other side of that, Alstom is under pressure. It was down more than 1%. This is as a French newspaper saying that their rail deal likely won't get EU approval. The article says they failed to convince the European Commission that their planned merger should be approved because of competitive threat from China. So be keeping an eye on both those stocks. ArcelorMittal to the upside, more than 2.5%. This is we see all the miners really gaining this morning. It's the biggest index mover on the Stock 600, and leading the way is ArcelorMittal. This comes on the backdrop of these trade talks that are taking place between U.S. and Chinese officials. And then finally, BT Group also to the upside, up more than 1%. This is as the Mail on Sunday reported it's working with advisors to ward off any potential takeover from any overseas bidders, also from the German rival Deutsche Telekom. So the newspaper saying that it's reportedly been working with bankers at Goldman Sachs and an advice
but there were some bright pockets, including Ray Dalio's Bridgewater, which outperformed the market. With more details on this, we're joined now from Singapore by Bloomberg's Katrina Nicholas. Katrina, good to
in 2018, and the S&P 500 index, well, that was down about 4.4% if you reinvested your dividends. And this actually isn't a one-off for Ray Dalio's fund. Since its inception in 1991, the Pure Alpha Strategy Fund has had an average annualized net return of about 12%.
Ray Dalio is just really making headlines and breaking records here. How does he do it?
Well, I think, we are seeing pockets of outperformance and, bearish and bullish bets. I mean, just here in Asia, in Singapore today, we had news of another one, Silbra. That's a tech-focused hedge fund. It's up 5% last month and about bringing returns for the year to 11%. Now, if you look at how it did it, at least, it places both bullish and bearish bets, bets on stocks like Amazon to Alibaba, and it actually took on slightly more bearish bets in the fourth quarter. That was to help it insulate itself from the market sell-off. And we're seeing strategies like that win off basically for Ray Dalio as well.
Okay, Katrina, thank you very much. Katrina Nicholas joining us there from Singapore with the latest on the hedge fund sector. Tough year in 2018. Coco Agbou-Blower from Societe Generale is still with us. Coco, I suppose the link in terms of the conversation, you were talking about flows. Tell us how this, the troubles that hedge funds have been having in 2018, how that ties into your flow strategy.
Well, I mean, when it comes to hedge fund, it's very Darwinian. So the survivor get more assets, and those who underperform are clearly sort of shut down and then have to reinvent themselves. I think the bigger question for the whole industry, but it's also not just hedge fund, just asset manager global, because we see multi-asset also having a tough 2018 because of the uncertainty and the volatility of asset classes. So the question will be going forward whether the outflows could force a lot of these asset managers and hedge funds to raise cash and therefore could take another push another leg down in markets and before we see a proper bottom and a healthy rebound. And I think that will be the question going forward.
Do you see investors, I mean, are flows going back into hedge funds at all because 2018 was such a horrible year? Do people buy the dips in this case as well? Or is everybody just running for the doors who wasn't invested with Dalio?
Well, this is a good point. We're starting to see a lot of interest for volatility-based hedge funds. So those hedge funds who have the ability to provide convexity or at least outperformance in a significant downturn, given the concern about the end of the business cycle, etc. So volatility or convexity hedge funds are seeing interest, even though their performance has been challenging over the past few years because volatility has been so low. But as your chart point out, with the 10-day realized vol on the S&P reaching close to 40%, there's clearly demand for specific strategies that can deliver a specific return to investors.
It's interesting, isn't it? I mean, hedge funds become such a big space in recent years, and so that one term hides so many different types of businesses and strategies, doesn't it, obviously? Let me ask about where you see investors should hide from this end of the cycle then, the acceptance phase that we're going through then, Koku. Where do we hide during acceptance? You're suggesting that people go long the iTraxx crossover super senior tranches. Is this sort of going up the credit scale then? What is the big picture recommendation?
Absolutely. Clearly, when you go into late cycle, the sort of weakest point tends to be the credit market. And clearly, this is where companies start to suffer from a drop in free cash flow, their inability to service their debt, particularly with the refinancing wave we're likely to see in the next 3 years. Credit will be a tricky market. But going through super senior tranches where you are sort of immunized for the first sort of 10, 15 default allows you to sort of get some carry without taking a hit when it comes to default. The other two strategy that we like is curve steepeners when it comes to the US, because we expect the yield curve to bull steepen, i.e. the short end of the yield curve to come down, pricing a recession. So 1 year forward or 2 year forward, two stands curve steepener makes sense. And the last one in the equity space is going short the Russell and going long a basket of strong balance sheet. And this is a trade that makes a lot of sense because companies will start to default in the high yield or small cap universe, and having a long strong balance sheet, short weak balance sheet effectively through that Russell versus long strong balance sheet is a nice way to bring convexity and protect portfolio against a credit meltdown that we're likely to see.
All right, so after acceptance comes anger. We'll talk to Koku about what that means for February. Then you've got depression, bargaining, and then depression. We'll get more on the stages of grief with Koku and how that relates to markets and how you should be investing from Societe Generale. First, I want to take a look at markets right now. We have seen the Stock 600 or the Stock 50 at the very least turn negative. So some of the indexes in Europe are now falling, including the IBEX and the FTSE MIB. Here you see the sector breakdown, and we're seeing still really the defensive stocks down, or groups, I should say, food and beverage and healthcare falling. But you also see banks among the losers right now, and that's got to be a concern if you're long risk assets. Coming up, Theresa May steps up her battle to persuade the British Parliament to back her deal. Kind of. At least she's talking some. We'll see if anything that she says is at all new. This is Bloomberg.
Welcome back to the European Open. We are 23 minutes into your trading day, a positive trading day across European equities, but not by much, I should say. We had seen a very strong session coming through in Asia, bouncing off those strong gains in the United States because of what Powell said and what the PBOC did and because of the jobs report. But the extent of the gains here in Europe, much more muted. The Stoxx 600 up by 0.1% right now. Let's talk about the UK a little more. British lawmakers return from the holiday break to little clarity on the campaign to avert a no-deal Brexit. Theresa May is stepping up the battle to persuade opponents to back her deal, warning about the consequences if they reject her plan.
If the deal is not voted on as this vote that's coming up, then actually we're going to be in uncharted territory. I don't think anybody can say exactly what will happen in terms of the reaction.
Theresa May speaking over the weekend there. Now, Coco Agbubloa from Societe Generale is still with us. And Coco, looking at your trading ideas around Brexit, you talk about going long a Brexit CDS basket versus the iTraxx main. So you think that you're going to need to buy protection for UK corporates, for UK PLC. You think this is going to damage their cash flows, so they're going to find it difficult to service debt?
Yes, absolutely. So if you look at the spectrum of asset classes around the Brexit risk, so you have the sterling that's clearly already pricing a lot of volatility going forward. You have the large cap, small cap in the UK that's already trading at a discount to some extent. So one of the things we're trying to look at out of the box is to sort of build a thematic basket of CDS where you go long the CDS of companies that have a lot of leverage and debt, whereby a sort of weaker free cash flow linked to a bad Brexit outcome could jeopardize their sort of credit solvency. So as a result, you have an interesting long basket of CDS finance by the iTraxx main to sort of optimize the carry, and then you get yourself an interesting Brexit hedge trade.
Okay.
Let me, I was reading your 5 stages of grief as if it was a forecast, but you're saying we've gone through those already in 2018, and now 2019 is the year of acceptance. Should have been easy enough for me, but I'm quitting sugar. I wonder if that is the way you look at markets. Can you look at Brexit that way as well right now? I mean, could we possibly be in a stage of acceptance, or is there just far too much uncertainty?
Well, I mean, when it comes to Brexit, I think you can go through this cycle of grief a few times. But I do sort of agree that the market has clearly gone through a phase of sort of denial, anger, depression. And now we're clearly seeing investor accepting the fact that, we could have a sort of a no-deal Brexit, or at least some sort of a deal that will create more volatility going forward. So, and I think this is pretty much a story of 2018. We've gone through so much that investors are now not are fully cognizant of the distribution of outcomes, and this is where our view is that the ability to design a portfolio that will withstand the shocks going forward should be a lot easier since we've gone through a lot of these scenarios already in 2018.
Yeah, on Brexit, I wonder, can you get to acceptance, Koku, when you don't exactly know what you're accepting? Maybe that's part of a longer conversation, longer thesis. Koku Agbubloa joining us from Societe Generale. He stays with us here on the programme this Monday morning. Up next, glass half full. UBS Chairman Axel Weber tells Bloomberg the pessimism that's marked the start of 2019 is overdone. We'll hear that exclusive interview next. This is Bloomberg.
minutes into the trade news here. Top headlines for you off the Bloomberg terminal. The risk rally takes a breather. European stocks struggle to get off the ground after a rip-roaring Asian session. U.S. equity futures, though, still point to a positive open for Wall Street. Stocks up, dollar down. The greenback hits its lowest level in 2 months, and Goldman Sachs says expected to fall further. The investment bank also lowers its forecast for oil as BlackRock is, quote, constructive on gold. And trade talks resume. A U.S. delegation lands in Beijing today with just over 50 days to broker a resolution on tariffs. Meanwhile, analysts say the PBOC's latest move to cushion the slowdown won't be its last. Good morning. Welcome to Bloomberg Markets. This is the European Open. I'm Matt Miller here in Berlin alongside Anna Edwards at Bloomberg's European headquarters in London. Anna?
Matt, we're 30 minutes into the trading day, of course. Let's have a look at how things are shaping up then. This is the MOV screen on the stock 600. AMS, which is a tech play in Europe, up by 8%. Of course, we saw anything connected to Apple really beaten up by the Apple warning last week. Perhaps the market is taking a slightly different view this morning. Generally speaking, though, basic resources, the stronger oil price, all of that having an impact on what we're seeing at the upside on the equity market, certainly at the very start of the trading day this morning. Let's switch to the downside, though, because of some of the downgrades that we've seen on a number of stocks having an impact this morning. We've got Centrica down by 4.3%. This supplier of energy in the UK market, they were cut by Jefferies, so that's one of the ones we're focused on. Intercontinental Hotels down by 2.6%. Morgan Stanley cut that one because they said the figures made them nervous, so that's a couple of the names we're focused on this morning. We've also seen Siemens and Alstom. There you go, Alstom down by 2.9%. Siemens and Alstom trying to put together their train businesses, and we see ongoing news flow this domestically in the French press this morning about the difficulties they could face in doing that. Let's get a first word news update. Desley Humphrey has that for us. Good morning, Desley.
Good morning, Anna. US officials have arrived in Beijing for face-to-face trade negotiations beginning today. It's the first formal meeting since Presidents Trump and Xi agreed last month to a 90-day tariff truce. Both sides face a resumption of tariffs in March if they do not strike a deal. The South China Morning Post reports that Trump may hold talks with China's vice president later this month in Davos. President Trump says he's now planning a steel barrier rather than a concrete wall on the Mexican border. He's also renewed his threat to invoke a national emergency as a way to circumvent Congress and build it. He says that will depend on what happens in ongoing talks to end a partial government shutdown, which is now into its third week. Democrats have already threatened a legal fight if Trump tries to declare a national emergency.
Build a steel barrier. Steel. It'll be made out of steel. It'll be less obtrusive and it'll be stronger. But it'll be less obtrusive, stronger, and we're able to use our great companies to make it by using steel. So we're going to be doing a steel barrier, and that gives us great strength at the border.
Green Book about race relations in the 1960s US South and Bohemian Rhapsody, the biopic about Queen frontman Freddie Mercury, have emerged as the top films at the 76 Golden Globe Awards over A Star is Born. Rami Malek won the Golden Globe for Best Actor in the film drama for his portrayal of the late singer in the 20th Century Fox film. Host Sandra Oh won an award for Best Actress in a TV drama series. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Desley Humphrey. This is Bloomberg. Matt, Anna.
Desley, thanks very much. Desley Humphrey there with your Bloomberg Business Flash, your first word news. Now, the sense of pessimism that's marked the beginning of 2019 is overdone. At least that's the view of UBS Group Chairman Axel Weber. He says the rout on global markets is overshadowing still relatively good economic growth. He spoke exclusively to Bloomberg on the sidelines of the bank's Greater China Conference in Shanghai.
The market, in my view, is taking a too bearish view on the economy. The economy is still doing well, and yes, there are difficulties we need to watch, but overall, I think the sentiment is not as good as it should be because we're still in a favorable growth environment, and that seems to get overshadowed by most of the discussions.
What is the environment like in Shanghai where you're at right now as you speak to all of these people and companies in China?
Well, I have the starting panel will be with Governor Zhou Shuangzhou and with Janet Yellen and myself, and we'll talk about the state of monetary policy. And clearly monetary policy and the retreat of monetary policy, you know, the Fed raising rates and possibly going into a pause now, the European Central Bank stopping its purchase program, those are all events that really have changed what the global economy was driven by for the last couple of years. And markets have to get used to that. And that adjustment is a difficult one, but I think markets will manage. So monetary policy is going to continue to be very responsive to economic situation. And as I said, this economic situation is cooling off somewhat. There's less of an upswing than we might have seen last year, but there's no reason to be skeptical, really. We still have a relatively good global economy. We still have relatively good performance on trade. And yes, there are trade disputes, but at this stage, it really is setting the stage for the future collaboration between the major economies rather than already embarking on some confrontation. There are some ongoing discussions, and as long as discussions are ongoing, I think we're in a good place.
By central banks being responsive, do you expect the Fed to react to more downtrends towards the economy and the global economy, say calling off some rate hikes this year or just changing the timing of these increases?
Our economists pretty early on had already sort of penciled in a pause for the Fed in the last quarter of the last year, which didn't happen because some of the impact of the trade disputes has been less front-loaded than was expected. But we clearly expect in the first half of this year for the Fed to look at the data, to be data dependent. And since inflation hasn't really surged and isn't a major problem yet, the Fed can take its stride, and I think they will be quite cautious in the first half of this year to really look at the data, and I think that will lead them to a pause in the March meeting. I think it's unclear what the second half of the year will bring. I think the market has run a bit ahead of itself with the expectation that there might be first rate cuts on the horizon. We do see the economy, you know, less dynamic going forward, but we don't see any likelihood of a recession anytime soon. So I would have a question mark around the Fed moving the opposite direction that quickly after they've continued to raise rates throughout the year with four rate hikes. So we see less rate hikes in the future, but not clearly a change of direction. But the pause already has reassured the market to somewhat, and that is now widely expected.
That was UBS Group Chairman Axel Weber, former head of the Bundesbank, speaking exclusively to Bloomberg at the UBS Greater China Conference in Shanghai. Now, as U.S.-China talks get underway, here's a look at some of the key issues. The U.S. has accused China of forcing American companies to share sensitive technology, and everyone accuses China of stealing intellectual property. Another concern is Huawei. The company has long denied claims by the U.S. and its allies of facilitating state-sponsored espionage. Rounding out this trio of tech issues is Beijing's Made in China 2025 plan, which the U.S. argues is in violation of WTO rules.
Now, trade tensions have also disrupted what should be a win-win deal for the two countries. Energy. The U.S. is becoming a major oil and natural gas exporter, while China has emerged as the world's biggest buyer of both. Another commodities issue is China's retaliatory tariffs on U.S. farm products. Plus, auto tariffs remain an ongoing concern, despite China temporarily scrapping its 25% tariff on U.S. imports at the start of the year. Koku Agbubloa from Societe Generale is still with us on set to talk about all of these interlinked themes involving trade. Koku, it's clear when you set out there's 6 or 7 areas for conversation between the US and China and the areas on which they disagree, it's clear that it's very difficult to define what success is going to look like. Is the market just looking for reduced tariffs? Is that all that matters, or is it going to get more complex?
Well, I think there's obviously a decision tree and there's a lot of complexity, but one thing that's for sure is that the sectors that have been affected quite significantly have been the tech stocks in the US, with Apple being a good example, but also the auto industry globally, both in Europe and the US. So clearly the market is looking for sort of stabilization and sort of agreement, because otherwise you are likely to see more volatility going forward. But in terms of rebound and potentially for a rebound, the sort of the HSCI index, so the Hang Seng for sure, and the Nasdaq and some of the European market like the DAX, for example, are the ones that could have the biggest potential for rebound should we get a sort of agreement going forward.
Are you more likely to get, Koku, an agreement, for example, on autos, because it's just so easy for President Trump and possibly Xi as well to tout that kind of deal to their constituency, rather than something like, you know, refrigerator parts that just doesn't make such good headline news?
Well, clearly there needs to be some political win from the Trump perspective. But there will be obviously give and take, and it's very difficult to sort of anticipate what form a deal could have. But from an investor standpoint, what really matters is to show that the two biggest and largest economy in the world find a way to sort of halt, or at least have a constructive path going forward in terms of their trade negotiation and trade relationships. But in terms of the specificities, clearly there will have to be a political win for both sides so that they can save face, obviously.
Okay, Koku, thank you very much. Great to have you with us, as always, bright and early this Monday morning. Koku Angbublower, Global Head of Flow Strategy and Solutions at SocGen. And Koku will be joining us on Bloomberg Radio's Daybreak Europe live programme on London DAB Digital to carry on the conversation. So Matt and I will enjoy speaking to him from the top of the next hour. Let's take a look at your mid-cap movers this morning. Anne-Marie Horden has them for you. Anne-Marie.
Thanks, Anna. Let's kick it off at Alstom to the downside, down more than 2% this morning. This is a French newspaper reporting that Alstom and Siemens rail deal will likely not get EU approval. The article is pointing to the fact that they failed to convince the European Commission that their planned merger should be approved because of competitive threats from China. AMS to the upside, look at that, up more than 5%. Really, technology on a whole is seeing quite a positive day. This could be a read across from what we saw in Apple on Friday, closing out the day up more than 4%. Also, of course, we have the trade talks taking place positively, maybe a positive backdrop for tech stocks. And Adyen, also in the tech sector, up nearly 5% this morning, really soaring, this fintech company, as Bank of America upgraded them. Bank of America sees a 25% potential upside for them.
All right, Anne-Marie, thanks very much. Anne-Marie Horden there with some of your mid-cap movers. Up next, Apple steps out of the walled garden. The iPhone maker strikes a deal to offer its iTunes content on Samsung TVs. We'll talk about that and more in our weekly deals report next. This is Bloomberg.
Welcome back to the European Open. It is 8:45 here in London, 9:45 if you're in Berlin, with Matt Miller. Positive on European equity markets, but not by much, really only fractionally above the flat line on the Stock 600 this morning, despite expectations that we would bounce after the US close that was, and the strength of the session over in Asia. The dynamic here in Europe a little more subdued. It is M&A Monday, though, so let's take a closer look at some of the deals which are driving markets in Europe and talk about expectations for 2019. Joining us now from our deals team is Ruth David. Ruth, very good morning to you. We need to talk a little bit about a deal that you flagged to us as being quite interesting, and we mentioned this before the break. This is Apple and what it's doing with its iTunes content and finally offering it on a non-Apple device. Is this a big deal?
With Samsung, which is so interesting because for years they were in all these patent battles and all of that, right? I mean, even though they've had partnerships before, but there's an interesting idea that our story explores, which is that the friend of, or no, the enemy of my enemy is my friend. And, you know, Apple has now got competition from Netflix and Amazon, and you have Spotify in there. So how they can get to this TV market, Samsung has about 33% of it according to some statistics, and how they can capture that at a time when the iPhone revenues, they were saying, are slowing down. And this seems to be one of the ways that they're looking at doing.
Redefining the frenemy relationship. Matt?
Absolutely.
I mean, it'll be great to be able to ditch my Apple TV box and just have the Apple TV in my Samsung TV. Maybe they'll just sell a remote for that. Let me ask about countries, regions here. Japan beat China to dominate Asia M&A last year. What should we expect on MA Go for 2019?
It definitely seems like Japan is going to be very much front and center. I mean, you know, we were talking about them having a war chest, Japanese companies, of about 900 billion in cash. And if you remember last year, the biggest deal that happened was Takeda buying Shire, which was a Japanese company looking both outside its key market. It seems like that's something that we're going to continue seeing this year. I mean, there's a lot of hesitancy on the part of regulated and in a lot of markets around Chinese inbound M&A, whereas it seems like Japan doesn't have as many restrictions, so they could maybe come in and fill that gap. I mean, they outbid China last year, so that could definitely continue.
Let me ask you about another story that just crossed the Bloomberg a few minutes ago, Ruth, and that was that Temasek is said to weigh options for its stake in the retailer A.S. Watson. And if you're not aware of A.S. Watson, it's the Superdrug brand. It's also a retail brand over in Germany as well, Rossmann Pharmacies in Germany. The story here, this is a long-running one, you've led me to believe, but it's an interesting time to be considering it selling UK retail assets, given the uncertainty that hangs over the UK economy.
Absolutely. But it also seems like if you're an Asian acquirer or you're an acquirer in another part of the world and you're seeing the way that the pound is doing and you have that arbitrage, and then you think, well, maybe this business is still going to continue doing well because it has some global operations, right? Why not come in now and make a bid? The first deal of this year was, you know, this Indonesian company coming in for an energy maker in the UK. So it seems like we will still have pockets of activity where UK targets are appealing, though whether we have another Takeda Shire kind of deal, who knows? I'm not going to go out and predict it won't happen, because then it might happen tomorrow.
All right, Ruth, thanks very much. There's a lot going on in M&A, so we appreciate you sharing some time on a Monday morning. Ruth David from our deals team. If you're a Terminal subscriber, you can check out the newest and the biggest M&A news at MA Go, and actually it's one of the most amazing functions on the Terminal. There's an absolute wealth of information. You can slice and dice it in any way you like. I want to get to the stock of the hour, which is Alstom right now. The third biggest decliner, or in terms of percentage losses on the Stock 600, the third biggest loser on the Stock 600 right now, on reports that the Siemens rail deal will likely not get the okay from UK regulators. So if you take a look at Alstom stock right now, you can see it's down almost 3%, down to 33.81. If you take a look at the graphic dashboard, which you get by typing GD at the end of any equity function, so ALO at FP, equity GD, you can see the price decline compared to its peers there, as well as the volume compared to an average over the past 20 days. You can really get a wealth of information from this function as well. You can customize it to fit your own needs as far as equity screening. Anna?
Let's tell you what's coming up on the programme. 8:50 here in London, Matt, 9:50 in Berlin. Up next, we'll talk about the year ahead for Bitcoin. We're in a very different place at the start of this year compared to where we were at the start of 2018 on the Bitcoin conversation. We'll put that in perspective. Gloomy skies over London this morning. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are about 53 minutes into the trading day, and we're looking at markets that equity indexes that were gaining but have since gone flat, not feeling the same enthusiasm that the Asian markets did about the monster rally that we saw in the U.S. on Friday. Now, we've had a few calls out from Goldman Sachs. The firm has cut its forecast for oil this year. It's also recommending that investors bet against the dollar, and it sees the tech slowdown hitting Asia. Goldman is one of the first Wall Street banks to prepare for an establishment embrace of cryptocurrencies, which has not yet emerged. So the question is it too late for a revival of Bitcoin, at least in terms of adoption, if not price? Joining us now is Bloomberg's Alistair Marsh. Alistair, talk to us about the Bitcoin community, how they've reacted to the massive drop in prices over 2018 and what 2019 holds for Bitcoin.
which, given the historical precedent over the last 18 months, is actually a relatively tight range. So Bitcoin will be kind of a bit more boring, a bit more stable, and perhaps a bit more niche, just for those diehards.
A bit more boring and a bit more stable. Well, for institutions to get involved, maybe they would welcome that, because some had expected a wave of institutional money then, Alistair, to spark another. Why not? Just because the price dropped?
Right, well, there's been a lot of talk about the herd is coming. This is a refrain that we hear a lot, that institutional money is coming to crypto.
For the European Open coming up on Bloomberg. Later we speak to the economist Robert Schiller. Don't miss that interview, 1:30. This is Bloomberg.
stocks in Asia jump while Europe searches for direction. Back to the table, Washington and Beijing resumed trade talks in the first formal meeting since a 90-day truce was agreed back in December. And President Trump renews his threat to declare national emergency to bypass Congress in order to build the wall. Well, the shutdown enters its 7th day. Well, good morning, everyone. Good afternoon. If you're to a higher open, but I am looking at dollar falling to the lowest in more than 2 months against a lot of its peers. Here in Europe, you can see the trading session is pretty much flat. And then Treasuries edging up after a slide on Friday that actually sent yields soaring back to 2.67%. Now, coming up on Bloomberg Surveillance in the next hour, we'll be talking global risks with John Studinsky from PIMCO. Now, let's get straight to the Bloomberg First Word News. In New York City, here's Viviana Hurtado. Hi, Viviana.
Hi, Francine. President Xi Jinping's top economic advisor reportedly attending the first day of U.S.-China trade talks. U.S. officials are in Beijing for face-to-face trade negotiations between the world's two biggest economies. It's the first formal meeting since Presidents Trump and Xi agreed assurances from the EU. Meanwhile, more than 200 lawmakers from both main parties called on May to rule out a no-deal Brexit. They say it would threaten voters' livelihoods.
If the deal is not voted on as this vote that's coming up, then actually we're going to be in uncharted territory.
Rather than a concrete wall on the U.S.-Mexico border. He's also renewed his threat to invoke a national emergency as a way to circumvent Congress and build it. He says that will depend on what happens to end a partial federal government shutdown. It's now in its 3rd week. Democrats have already threatened a legal fight if Trump tries to declare a national emergency.
We'll build a steel barrier. Steel. It'll be made out of steel. It'll be less obtrusive and it'll be stronger. But it'll be less obtrusive, stronger, and we're able to use our great companies to make it by using steel. So we're going to be doing a steel barrier, and that gives us great strength at the border.
In an unprecedented move, the King of Malaysia has abdicated. Sultan Muhammad V stepping down immediately. A palace statement gives no reason, but the move follows media reports of ill health and rumors of his marriage to a former Russian beauty queen. The position is mostly ceremonial, but holds some discretionary powers. Sultan Muhammad, for example, pardoning Anwar Ibrahim. He is in line to be Malaysia's next prime minister. Green Book about race relations in the 1960s U.S. South, and Bohemian Rhapsody, the biopic about Queen frontman Freddie Mercury, emerging as the top films at the 76th Golden Globe Awards. These two films, by the way, besting A Star is Born. Rami Malek winning the Golden Globe for Best Actor in a Film Drama for his portrayal of the late singer in the 20th Century Fox film. Host Sandra Oh winning the award for Best Actress in a TV drama series. Global News 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Viviana Hurtado. This is Bloomberg. Francine?
Viviana, thank you so much. Now, Asian stocks surging this morning. European struggles to find direction. This comes after soothing comments from the Fed Chair Jay Powell on Friday and a better-than-expected jobs report. Well, Powell said Fed policy is flexible and officials are listening carefully to financial markets. So are the bulls back? Joining us now for the hour, Vincent Chenieux, he's head of research at Generali Investment, and Jeff Yu, he is head of the UK Investment Office for UBS Wealth Management. So thank you both for joining us. First, let's start with, the main trends for 2019 and your main pitfalls. Vincent, where would you be looking at? What are the markets looking at to give them directions?
Well, I think a lot of pessimism has built up in Q4. Remember that the S&P experienced its worst December since the Great Depression. So a lot of pessimism. The market is pricing a sharp slowdown in the economy. This is probably slightly overdone, but nevertheless, we are facing a challenging year. By this summer, the U.S. economy will have enjoyed the longest growth cycle ever.
Yep.
And you can't help but think that the concerns about a downturn are going to stick around. So a challenging year, although valuation is now more attractive in equities.
Jeffrey?
We're largely on the same page there. Just stay invested, be diversified, but be sensible and look for pockets of value. I think it's a time for the stock pickers to be selective, but I think the overarching theme is need to manage event risk and manage volatility.
Okay, let me bring you to a markets chat, which is also one of our questions of the day to the MLive. This is our markets blog, which I'll get to in a second. But Jeffrey, if you look at my chart over there, it's a simple chart of the S&P 500. We brought it back to the 1950s.
And they'll make adjustment. People understanding exactly what's going on. But many of those people that won't be receiving a paycheck, many of those people agree 100% with what I'm doing.
Now, the president previously said they were mostly Democrats who were facing this shutdown. According to White House Acting Chief of Staff Mick Mulvaney, if no agreement is reached to end the shutdown by midnight Tuesday, the federal payroll run for Friday night will not go out as planned.
All right, White House Press Secretary Sarah Sanders falsely suggesting terrorists are pouring across the southern border into the United States by the thousands. That's what she implied Sunday on Fox News, where she was shot down by host Chris Wallace.
We know that roughly nearly 4,000 known or suspected terrorists come into our country illegally. And we know that our most vulnerable point of entry is at our southern border.
I know the statistic. I didn't know if you were going to use it, but I studied up on this. Do you know where those 4,000 people come, or where they're captured? Airports.
Not always, but certainly a large number.
The State Department says there hasn't been any terrorists that they found coming across the southern border from Mexico.
It's by air, it's by land, and it's by sea. It's all of the above.
Sanders also told Wallace President Trump, quote, means what he says when he suggests the shutdown could last for months or years.
National Security Advisor John Bolton signaling a pause in plans for a U.S. troop withdrawal from Syria. During a news conference in Jerusalem, Bolton insisted U.S. troops will not pull out until ISIS is destroyed. Bolton also expressed concern about the welfare of the U.S.-backed Kurds and directly contradicted the president.
We're going to be discussing the president's decision to withdraw, but to do so from northeast Syria in a way that makes sure that ISIS is defeated and is not able to revive itself.
A reminder, President Trump announced on December 19th that the U.S. would depart within 30 days. At the time, the president declared ISIS had been defeated in Syria. Since then, he's changed his tune and said Sunday the U.S., quote, won't be finally pulled out until ISIS is gone. Earlier, Bolton told reporters the United States will pull out of Syria only with assurances that Turkey will not attack America's Kurdish allies there.
All right, Joe Biden is expected to decide whether he will jump into the 2020 race within a month. A close Biden ally tells CNN the former VP indicated he is leaning toward a run and hoped to reach a decision with family over the holidays. So far, no word, but the ally says Biden believes he could beat Trump in the general election. Some Biden allies worry his uncertainty about running may be a sign the 76-year-old doesn't have passion to mount another campaign. Biden has said even if he decides in January, he would wait to announce it.
Elizabeth Warren looking to gain some early momentum for a possible White House run in 2020. The Massachusetts senator canvassing the state of Iowa over the weekend, and she was confronted by a voter in Sioux City who criticized her decision to take a DNA test to prove her claims of Native American ancestry.
I am not a person of color. I am not a citizen of a tribe.
When I first ran for public office, the first time was in 2012, and the Republicans honed in on this part of my history and thought they could make a lot of hay out of it. A lot of racial slurs and a lot of ugly stuff that went on. And so my decision was, I'm just going to put it all out there.
Warren campaigned in 5 cities and 4 counties over the past 3 days, and it took a toll. The senator losing her voice by the end of her visit.
Yeah, welcome to the race for 2020 when voices and
begin to fade.
And patience both fade. All right. In an interview with 60 Minutes, newly elected Congresswoman Alexandria Ocasio-Cortez proposed taxing the wealthy as much as 70% to fund a climate change plan she's pushing that's called Green New Deal.
But once you get to like the tippy tops, on your $10 millionth dollar, sometimes you see tax rates as high as 60 or 70%. That doesn't mean all $10 million are taxed at an extremely high rate, but it means that as you climb up this ladder, you should be contributing more.
The Green New Deal calls for reducing carbon emissions to zero and moving the U.S. off of fossil fuels in 10 years. The freshman progressive acknowledged that her goal is ambitious.
It's going to require a lot of rapid change that we don't even conceive as possible right now. What is the problem with trying to push our technological capacities to the furthest extent possible?
Ocasio-Cortez is the youngest woman elected to Congress, a Democratic socialist. She has also pushed Medicare for all, tuition-free public college, canceling all student loan debt, and housing as a federal right.
All right, late last night, Bohemian Rhapsody, the surprise champion, upsetting A Star is Born for Best Drama at the Golden Globes last night. Actor Rami Malek scored Best Actor honors for his portrayal of Queen's frontman.
Thank you to Freddie Mercury for giving me the joy of a lifetime. I love you, you beautiful man. This is for and because of you, gorgeous.
And Green Book won 3 Globes, the most of any movie, Best Musical or Comedy, among the trophies for the road trip movie about the unlikely friendship between African-American pianist Dr. Don Shirley and his Italian-American driver. Best Actress in a Drama, Glenn Close earned a standing ovation for her tearful speech, urging women to follow their dreams.
We have to say, I can do that, and I should be allowed to do that.
Spoke about her mom in that dramatic speech. Best Supporting Actress winner Regina King vowing that her upcoming projects will be 50% female, and she challenged others to follow her lead. A Star is Born took home 1 Globe, Lady Gaga winning for the Best Original Song, Shallows.
Other big winners included Best Director Alfonso Cuarón and the Best Foreign Language Film for his latest project, Roma. Christian Bale, Best Performance by an Actor in a Motion Picture, Comedy, or Musical for playing Dick Cheney in Vice. He credited Satan as his inspiration for his performance. Olivia Colman won Best Performance by an Actress in a Motion Picture, Musical, or Comedy for The Favorite. The Americans picked up Best TV Drama honors for its final season, and The Kominsky Method took home the Best TV Series, Musical, or Comedy prize. There were a lot of surprises, I felt like, last night. Didn't you?
Yeah, really, I think Bohemian Rhapsody was the shocker.
Yeah, and I didn't think I did not hear much buzz about Glenn Close winning. And
everyone thought Lady Gaga would take home that award. Right. All right, ahead, one of the men suspected in the shooting death of 7-year-old Jasmine Barnes is set to be charged with capital murder this morning. How police tracked him down after a week-long search.
Breathe freely fast with Vicks Sinex.
My congestion's gone.